Welcome back to the channel. Today is July 14th, 2026, and I am looking at the cryptocurrency chart of Velvet, ticker symbol VELVET, specifically on the Qcoin chart. Before we get started, I am a amateur trader and investor. I have a day job that does not have anything to do with finance. Therefore, I probably do not have the nuance of a professional trader. However, I do like to look at the charts, and if my channel helps you do some more research on an asset or get a second opinion on it, that's all I'm trying to accomplish. Now, I don't know too much about Velvet. It was something I just kind of stumbled across, and it was actually recent, it was just like yesterday. And I saw something that was like, well, that's interesting. I haven't seen that before. And therefore, I sort of wanted to go over in more detail and use this as kind of an example of how to trade, very volatile cryptocurrencies. And so what Velvet is, apparently it is a native token of something called Velvet Capital. It has it's used in decentralized finance. It's a non-custodial DeFi exchange, and you can use AI. Apparently, it you know it's I don't know much about the fundamentals. I was more interested in the chart. Uh, so if this is something you're interested in getting into or learning more about, I really encourage you to go research it more. It is important to put fundamentals with charting. There are many chartists who say they don't need to know anything about the fundamentals of a particular asset, but I think that I don't think that's true. While it is true that you can have very short term disconnect from the fundamentals, uh, since I'm more of a long term trader, I really want to trade in something that has long term fundamentals. So, just for disclosure purposes, I am not invested in this coin, and I'm not going to probably get into it in the near future, and I'll explain why here in a second. But please consider that before you start getting into this particular coin. So let's talk about Velvet and what I find so interesting about this chart. So let's go back, okay, to about here, which is April 2026. And as you can see, this was kind of the start of a daily bull run. Okay. You had wave one, wave two, wave three, wave four, and then wave five. And so it came down, and that's where we are kind of day, but it has kind of grown up a little bit. So this was very explosive. But let's talk about what is interesting about this particular chart. So obviously, after this pause here, okay, we call this long thing. When you start a bull market and you have this kind of like long retracement, this is a pause, okay? So from this particular point here, we'll call it right here, as the end of the pause, we went up to a new all-time high of Velvet, and that was about, according to this, about, we'll call it a little under 1,900. It's 1,890% gain. Really incredible gain. If you had invested somewhere any around here, you made a lot of money. Okay, or maybe I should not say a lot of money. You made a big return on your investment. Okay, then the next day, and this was brutal. It had a 1 day drop. Okay, that is pretty brutal. And that 1 day drop was just about 80%. Okay. And it got lower, and that turned out to be about 83%, looks like 83, 84%, somewhere around there. Okay. And then if you take a look at this, okay, you take your measurement tool here and you go over here. In 14 days, it had a new all time high. That is So it dropped 80%, and then from this mark here to get to a new all-time high, it had a 600, approximately, we'll call it about, looks like 580% gain. Okay, so that's pretty volatile. Okay, all right, but if you're a trader, it's like, can you see this coming? Is there a way to tell that this is going to happen? Well, let's talk about that. I'm going to show you a couple of things. So the first thing that we're going to talk about is this movement here where it dropped. Okay, so you had an all-time high here. So what you can do as a trader is you can come over here, click the fib retracement, and I have just the default settings on the fib retracement on it. I didn't make any changes to it, and you can draw it down here. And actually, what you actually have to do, I'm doing this wrong, sorry. Okay, you start where the move started. Okay, I can't believe I'm making that mistake. I guess I was thinking fib extension, but we're going to go all the way up here. Okay, and so you go from the bottom to your top of the movement. So you don't do it here, and you don't do it down here where the bull run started. You do it on the last leg, or what we call the last wave. Okay, and what you are looking for is you are looking for uh, a, a it's retracing, it's going down. You're looking for it to for a bounce before you get below this golden zone. So they call the golden zone, and let's see if I can make this stand out. You have different fib levels, but the 618 is the bottom of the golden zone, and this is the halfway point. And as you can tell, price actually reacted before it hit the bottom of this golden zone, but this was definitely the golden zone. The reason why they call it the golden zone is because this is normally where most moves start from. So, for example, if you had this large move up, it will usually hit this golden zone, and that would be kind of the last check, the last chance for it to have a possibility of a new all-time high. It's less of a chance, but you can have reactions here, for example, but they happen less often here. But usually the 50% line and the golden zone is where most jags start. So what I mean by that is, so you have a stock that just had a big movement. You take your line, you go down. What the Fibonacci tracing is saying is that the farther this particular line goes, the less of a chance of a new all-time high. For example, if it goes down here, it would probably not make a new all-time high. But if it reverses here, practically a given, right? Maybe here, better chance. But the golden zone would be about a little bit below halfway, about right here. If it gets below this point, there's very rare likelihood that it's going to make a new all-time high. In this particular case, it bounced at the golden zone, and it started working its way back up. So that would be one way you could trade this. Okay, yes, if you didn't get out of the coin when it hit this all-time high, as in one day, if you didn't even look at your, let's say you had, I don't know the time frame in the day that this happened in, but you could have been significantly in this red area before you could even react. Especially if you didn't set a stop loss. But I'm going to show you something else here in a second on how to figure out when a coin is most likely to retrace. So that's that fib line. I'm going to remove this here, and let's go ahead and go to this fib line. And you take this from the bottom and you go all the way to the top here, and you see where the retracement happens. And as you can see, this particular asset, it didn't reverse in the golden zone nor the 50% rule. Okay, and yes, now it is starting to move an upward trend, but the likelihood of it to have a new all-time high, in other words, hitting this particular top trend line, which I'll show you here in a second, how I drew this, is less likely. Okay, so that's issue number one. I mean, that's one reason why I would hold in getting into Velvet, is because it didn't reverse in the golden zone to possibly make an all-time high again. But the other thing I want to show you is I'm going to bring on the 20 moving average, and I'm going to bring on the 200 simple moving average. So both of these are simple moving averages. You've got the 20 and you've got the 200. And if you were trading this, you would be able to get a sense that uh, that this big rig candle was about to take place. And you say, okay, why is that? Well, because it's doing a formation that we call the three finger spread. So, what is the three finger spread? You take three fingers, specifically your middle finger, so not your thumb and your pinky, and you put one finger on the price, one finger on the 20, and one finger on the 200. And as you can tell, if you spread those fingers on your monitor and you can barely reach each individual line, that is an example of a three finger spread. So what you have to understand about price is that typically it's like a child, okay? It starts out clumped together with the 20 and the 200. They're very close. And then the child wanders off. And the farther it gets away from the 20, it eventually gets uncomfortable and then comes back to the 20. So, as you can tell, if you can imagine this as a little child, it's wandered really far off from its parent. Its parent is the 200, and this may be a sibling. We'll call it like an older brother or something. But the price has gotten so far away from his older brother that he can barely see his older brother, so he wants to come back and get close to his older brother so he feels more comfortable. And that's what a three finger spread is. It happens all the time. Day traders use it a lot. You see it on any chart in any time frame. However, it's usually ignored on higher time frames like the daily. I but it is a phenomenon that happens a lot. So I really keep an eye on this. So when you see price getting so explosive over the 20, then you know that there's probably a reversal coming pretty soon. If you take this 20, there's kind of like zones, okay? Okay, and I'm just going to I'll just use this brush to kind of anywhere in here, okay, where you have price action, this would be zone 1. And these are imaginary zones, okay? This would probably be zone 2. And then once you get to zone 3, okay, which would be about right here, you get nervous because you know that once price gets in this zone 3, it's going to probably try to retrace back to the 20 moving average. In this particular case, I would say it actually hit zone 6, okay? These are imaginary zones. So it came very close over. So the higher this candle goes, the more nervous you get. So the way you would trade this, especially in cryptocurrency, is as you start getting past this third zone, uh, you would want to put a stop loss and because these are really large candles, at least the halfway point. So once you get out in this zone, you got past this zone, I would have put a stop loss here. And then the next day, you could have put a stop loss here. So you're not going to catch the entire top, but you know that this is getting so explosive that it's going to reverse. Sometimes, especially on this particular, especially if you've had a long leg like this, to be frank with you, I would have exited the trade because I know that I would not fear missing out because I know that it's getting too far from the 20 and it's going to reverse violently. Okay. And that's exactly what happened at this point. It's easy to talk about it after the fact. I mean, I wasn't watching it in real time, I wasn't there. But you'll just have to take my word for it when you're doing swing trades and stuff. That's kind of like what you do. So What you'll find interesting is we talked about the Fib retracement, how it reversed in the golden zone. It kind of created this support line here. But the third concept I want you to see is, do you see the angle of this 20? And I want you to tell that when the price dropped, and you don't know this when it's going to drop, whether the 20 is going to catch it, but normally the 20 has its best support and resistance properties when it's angled up or it's angled down. What that means is that, notice how the price came to the 20, it hit this support zone, which hadn't been established yet. You did have this wick down, but you didn't know this is a support zone. But look at how the price got caught on the 20, and the 20 kind of pushed it up. Yes, the body of the 20 closed a little below it. However, you have to think of moving averages as a zone. And that's why I drew use that highlighter, is because this particular price action was still within the zone of this moving average. Okay. So price actually dropped to this 20 moving average and it caught it on support. And then, as I mentioned, in 14 days, it went up and made a new all time high. And what happened the next time is, look, price just fell through it. The 20 didn't catch it. And why didn't the 20 catch it? Because on short term moving averages like the 20, it has its lowest support and resistance properties when it is flat. Okay? And on a longer term moving average like the 200, it has its greatest support and resistance properties when it is actually flat, not angled. Okay, so where we are right now with Velvet is we have dropped down to this support zone, and it did not have a reversal before the end of the golden pocket, which I showed before. Let me just go ahead and bring that up here. Okay, so it came down and it failed to reverse in this golden pocket, which would be this area up here. Okay. Now, as you can see, price is currently rising, but there's less of a chance that it's going to have a what we would call a new all-time high, because uh, even though this was a new high, it just dropped too low to have a good chance to actually make a new all-time high right here. Okay. However, I do want to say this, and that is, let's expand our view of this particular asset. So I'm going to go to the monthly chart. And if you look at it from the monthly perspective, it has the appearance that it may be still in a bull run. But the problem is that because this is with cryptocurrency, one thing you have to consider is that this KuCoin chart is what's called a centralized exchange chart. Okay. However, Velvet might have been trading for years, maybe just months. I don't know. I didn't look too much in the history of Velvet to know how long it was trading and what the chart looked like on decentralized exchanges. Okay. These are exchanges that are not centralized. I don't personally do a lot of trading on decentralized exchanges. Therefore, I don't know what wave we are in this particular broadening bull run. This could be, for example, wave 5, and so we're just going to start a long bear market and go down. I don't know, because I would have to look at the decentralized charts to see if I could figure out if Velvet is actually in a more monthly bull run that would be interesting to get into. I'm not going to cover that today. It's just something I want you to consider, even though this looks bullish. But what we are currently in is what's called a broadening wedge. It doesn't look right because this particular trend line was drawn on the weekly. Okay. All right. So typically what you can expect is price movement. Again, this is on a much larger scale. They usually draw broadening wedges on daily charts, but you can expect price to come up there and come down here. And if it breaks out of if it breaks out of this broadening wedge, it can be very explosive. Okay. but we're in the middle of the broadening wedge, so I don't want to get into price predictions or anything like that. All I just want you to know is that because we're kind of in the middle of the chart, and when I look at on the daily, it failed to start an upward leg before the golden zone. I'm currently staying out of the trade to see how the price movement goes. A couple of things could happen. If this is truly, there is another wave on a monthly perspective for this particular chart, this could be the start of sideways actions, which would be like a pause before it actually starts another leg up. And so we would just have to look and see over the next couple of weeks to see if it's a lot more likely that we are starting to range or do go sideways, or if it actually is going to continue higher and then touch this broadening wedge. Right now, it's too early to tell. There are other things you can look at, like the stochastic. I'll just throw this on real quickly. I'm not going to go into this in much detail. As you can see, the RSI is at the middle, momentum is going down. The MFI the money flow index is practically in the middle. And if you look at the ADX, well, there's definitely more buying than selling, which is good, but the buying is definitely angled down, and the selling, ironically, is angled down too. This is on the daily, and from a Ichimoku cloud perspective, we now have a cloud forming up here, which could be resistance. Okay, this bottom of this cloud can act as resistance, and therefore price may struggle to get above it. And that's why I think you may start to see sideways action with Velvet. But that's my take on it. That's all I really wanted to go over today. This was some interesting price movements, and I kind of wanted to give you an idea on how to trade that. Well, that's all I have. Look, with anything that you invest in, even though this particular asset had 1,000% increase, please, before you get into Velvet, I really encourage you to have a relationship with Jesus Christ, and you can ask him about things like this. Okay, all right. He can, you're not necessarily going to hear a word in the sense of like saying invest now, but what you're going to get is a feeling come over you and a reassurance, and you can ask, and you should ask Jesus Christ about any major moves you're making in your life. You have a bad coworker, you're feeling down, okay, you're wondering, you think you made somebody angry and you're wondering how to resolve that. Those are the types of things you should talk to Jesus about, just as any investment, you talk to Jesus about it. And that's what I really encourage you to do. But with that being said, I really hope that God blesses your day and God blesses your family. And that's it for today.